Well, good Monday morning and welcome to Connect, the California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. As you can see this morning, we actually are going to do a three-on-one conversation. We've got our end of the month mini panel, and we're going to focus today on sales and origination strategies for 2021 with three experts in the business. So I hope you're ready for a good conversation. We've got some really good guests, and I'm excited to jump right in. But before we do that, let's thank our sponsors over at Accelerate. So if you're looking to close more loans in 2021, which I'm sure everyone who's watching this or listening to this is certainly in that category. Certainly those who are my guests today are in that category. Accelerate's a great place to start and to check out. You can experience Accelerate's award-winning customer engagement platform that features lead management, CRM, call routing, sales enablement, marketing automation, borrower engagement, and data intelligence through innovative use of multi-channel marketing, which includes text, social media, email, direct mail, phone, ringless voicemail, retargeting, and much more. And if you know the founder and the CEO, president of the company, it's Josh Friend, a good friend of ours here at the California MBA, good supporter of our industry. And you can certainly catch him he's very active on LinkedIn. So if you want to connect with Josh, that's a great place to find him. Otherwise, you can schedule your personal demo at accelerate.com. All right, well, let's jump into the conversation here. Let's first introduce our panel here. So Erin Futterer is the Regional Vice President of Wholesale at Stearns Lending. Casey Hughes-Wade is the VP Relationship Manager at SLK Global Solutions. And James McKibban is Branch Manager at New American Funding. Welcome, panel.
Thank you.
Welcome. Thank you.
All right, well, let's start with the start here. Start with our backgrounds. For those that maybe don't know you in the industry, let's go through your a quick tour of your journey in the industry and how you got to where you are now. Casey, let's start with you.
Well, yes. Hello. Thank you so much, Dustin. It's so great to be with you, Erin and James, and everyone listening. Happy Monday. So my name is Casey Hughes-Wade. I'm Vice President of Relationships of Mortgage at SLK Global Solutions. We're a leading provider of digital platforms and business process management services. Traditionally, I've been on the service provider side for about 10 years, from the compliance and risk side over to credit, a little bit of fintech, and now, combining both SLK with digital platforms and workflow and process automation. So really happy to be here. I'm also known as an expert networker in the industry, really big on LinkedIn, social media, embrace social media. I've used it to grow my brand and grow my name in the industry. And I'm really excited for this conversation today. So thank you.
Yeah, sometimes the best way to catch Casey is on LinkedIn, right?
Absolutely, yes. With Catching Casey, a little video podcast I do. So yes.
Absolutely recommended. All right, Erin, how about let's find out what brought you to where you're at now at Stearns.
Well, thank you so much. And again, I appreciate being a part of this panel, and I'm excited for today. I started with Stearns in 2009, so I'm coming up on 12 years here. I started in the industry in 2005 as an account executive. So I came in right before it crashed and managed to survive. Of course, 8 and 9 were hard for everyone. And here I am, and just enjoy this company tremendously. I'm so proud to be here. So again, thanks everyone, and I look forward to today.
Yeah. Well, as someone who started the California MBA in 2004, I can sympathize that there's an interesting time to join the industry.
Yeah.
Right at the height of the market, or as the market was heating up to that extent. James, how about you?
Yeah, so I started in about 2005. I walked in like most people and just thought I would try this. It was my next job after college, and 16 years later, I'm still doing it. Most recently, last year was my best year, just to share from an origination standpoint. I closed a little over 200 million, but I definitely didn't start there. I had to struggle my first couple years in the business. I went from one lender, which was American Home Mortgage, as a junior processor. I basically shared an office with like 7 people with one table. So I definitely had to work my way up from that spot. Went to junior loan officer to loan officer. So kind of had the general plateau of people like myself. So now helping run a branch and really being more of a team lead is really more of my title. And so I think this year is going to be great. I also appreciate being here with all of you experts. It's a real honor. And look forward to hopefully sharing some of my, success and details, and also learning from you. So thank you for having me.
All right, thanks, James. And I think we've got certainly a great array of backgrounds and expertise here. So let's dive right in. So Erin, why don't we start with you on this question? So the refi boom obviously marches on as we start 2021 here. So from your perspective, what's the biggest challenge for originators?
Oh, every broker I talk to, they're tired. I think it's hard to keep up. I think it's hard to keep our momentum because, they're getting so busy and they're trying to continue to originate as well as close their loans. So it's just, I think, and trying to keep me time. It's really important that we work that work-life balance. And with everyone working from home, I think that's gotten a lot harder. As we kind of were talking about earlier too, with our kids at home. So there's just a lot going on, and I think time management and really trying to put times in there for things like working out or reading or just enjoying your family is really important to keep your momentum, to keep originating so that you don't burn out, because I think that's the biggest thing is burnout.
That's a good point. James, from your perspective as a branch manager, what are you seeing?
Yeah, so I mean, I'm more of a producing branch manager, so my role is still more to originate. I think you had some great points, Erin. I think you really have to be resilient right now. You're going to have days where you have 3 declines, and you have to just shake it off. Like this week for me, admittingly, has been pretty brutal. I've had borrowers cancel, so you really have to kind of dig deep and know that you're going to have deals that are 2 weeks from closing where you have to relock a rate, or you're going to lose a loan, or you have to take a day where you try to save 3 or 4 files, while you're also battling maybe a 2-week closing that comes on your desk. That's not easy. So I think it's just really trying to stretch yourself a little bit and know that it's going to be a long day. There's no way to really work 7 or 8 hours if you want to get to everything, if you're really pushing yourself. And in these low rate environments, I mean, I remember 2012 and 16 where I came in one day, rates went up a little bit and they went up a little more. And before you know it, you're up 3, you're up a half point, where you really want to see this window of time where I think statistically every client that you close should lead to 3 or 4 referrals within 18 months. Really see this window as the time to shine, to catapult your business, to take your business to the next level. But really, just you have to grind. You have to be tough right now. Erin had some good points as well with finding me time. I try to go to the gym in the morning to get it out of the way, or else I have no chance to, because by 7 or 8, I'm still going with work. And I'm usually pretty beat up mentally and physically by that point. But I think just get ready to grind this year. I try to do I try to do nothing during the day that's like an errand or like anything where I have to go get food. I like to have everything right here, because if I lose that work tunnel during the day, it kind of derails me. And I think you kind of have to be at your desk almost. For a lot of people, they're so needy, you almost have to have immediate response time. So I try to kind of organize my day on weekends, so during the week I can just go full speed, and that's helped me to really produce daily. But yeah, hope that answers it.
No, that's a good perspective and good thought there, James, especially on having your day planned out and organized, so you're not wasting time running errands. Because it is, I know just from my perspective, it's hard when you're at home to not get that sort of work-life division, to not get caught up in, well, I'm looking out my window, I see all these projects that need to get done. I can go run to the store right now. I can go run to the, run to Home Depot right now. But, then you lose focus and you've lost, you turn around and you've lost a couple of hours of work time. So I think that's good advice. Casey, how about you? From your perspective, what do you see as a challenge for originators this year?
I love this question, and I think Erin and James both made great points, and I tend to teeter a little bit towards Erin, because talking with hundreds of lenders and being in a unique position as a service provider at SOK, we do operate within our clients, the mortgage lenders, business and their operations and their workflows. So we're an extension of the lender, right? So I see a lot, and sometimes my job is just listening to their frustrations as managing the relationship and what they're dealing with day to day. And so I think, with several of the companies I work with, it is managing that burnout, right? How do we help our employees stay on top of and continue to work as hard as they're working from home, right? And so, I love the point about working out. For me, working, as much as I've been working lately, it's, when do I have time to shower sometimes, right? I'm on these Zoom calls and I have my hair, wrapped up in a towel, and they're like, well, let me see you. I'm like, no, not today, So running from meeting to meeting as well, and managing that burnout, I think is such an important factor that it's not talked about enough. And it is, a big issue, and people are starting to get really worn down, right? So empowering your employees, empowering your loan officers, giving them, tools to manage that is really important. And I think, back to what James said is, he's obviously in a producing role. It comes back back to, how do I manage the business I have today and still grow the business I want for the future, right? So focusing on your digital presence, your brand, right? This pressure to now focus maybe on purchase and building, going back to the relationship side of the business, right? How to manage all of that, I think is something that, originators are struggling with. And, it's having this huge pipeline, managing turn times, communicating with the borrower, right? Meeting expectations, and, working for the right company that really utilizes and has the right technology tools for you to do the best job possible is also something I know some loan officers are struggling with. So I think all three of us kind of I think we're all on the same page here with, what they're struggling with today.
Yeah. Well, and I mean, Casey, you mentioned the sort of the tech solutions here. Let's, take it in this direction. So, I mean, how can the tech solutions that are out there right now, how can they help the originators to keep pushing the envelope on volume right now without getting buried and losing touch with borrowers? And to your point, Casey, about relationships, how can they, stay in touch with their borrowers and keep that human contact without, sort of sacrificing volume? James, let's start with you on this one.
Yeah, so I've tried to embrace what the company offers. I used to take handwritten applications up until about 6 months ago. Everybody would make fun of me. They're like, how are you doing this? You're closing 40, 50 loans a month, and I would take a handwritten application. It was so archaic that finally I started using our rapid application. You send a link, they fill it out, you can upload everything. So, just simple things that companies offer. We really push our 7-year campaign at New American Funding, where if we close a loan and we service it, the realtor gets the marketing for 7 years, which is really cool. I'd really look at your, trigger leads. If anyone's doing a loan that you did that, outside of you, look at, trying to contact that buyer or that client, because it's going to happen, and you want to take the right approach with how you contact them, because people are inundated. I mean, turn the news on, you'll probably get coronavirus, politics, and then, where to get a mortgage rate, right? It's all you're going to probably get. And so I would also look at making sure that you're really organized with your databasing. Really make sure that you're adding every single person, because you never know who's going to be a good referrer. And make sure that your marketing team is also going to send out kind of a set it and forget it. Probably say at least once a week. We don't want to inundate people where they're opting out, but you have to stay really top of mind right now. I try to do, I probably have 4 or 5 different Excel spreadsheets open for me just to share every day, because you just have to be funneling through, all your clients and opportunities. You have to almost touch them just nonstop as you go up and down, because people have different needs. They want to hear from you, and you make it a message that's very helpful and encouraging and how you doing, but a lot of times then it leads to, hey, can you improve on my deal type of thing. One thing I just started looking into is text blasting a little bit, just because if you look at the open rate on a text, I think it's 98% versus an email is 20%. And I think that the time frame for a text for response is 90 seconds versus the average for an email is 90 minutes. So if you look at using technology a little bit just based on the data at hand, it's kind of like a lot of the top guys say, like Elon Musk. If you look at him, if you look at Steve Jobs, and you look at Warren Buffett, they're most successful with what they don't do versus what they do. They want to cut out things that don't. So look at how you can spend your day and really tackle business as an originator. Maybe don't take the buyer that wants to buy a home in 4 years and it's a manufactured home on leased land, because it's going to suck your time up, and look at where you can be most effective. So but yeah, that's how I'm kind of embracing technology a little bit.
That's really good to hear. That's good to hear, James. That's a good perspective on that. Casey, how about your perspective? You've got a little different perspective as someone who's working for a tech provider.
Right. I've worked for several different technology, companies at different points in my career. And I think the thing with technology you have to remember is that really, partnering with the right company, right? That's a partner and not just another solution that you're adding on top of all of these other technology solutions, right? You start to get really bogged down. It can almost get heavy, and it's too much tech sometimes, right? So making sure your technology is syncing together, making sure it's providing the efficiencies and the consistency that you want, on an operational standpoint that really empowers your loan officer to stay in communication, right, with the borrower, that provides transparency on the loan file, so then the processors and the underwriters then can communicate to the loan officer and thus to the borrower. So it's all kind of streamlining together to create the best workflow, for your business model, which obviously depends. And the one thing I know about the mortgage industry and working with so many different lenders nationally is that although lenders are all doing the same thing, they're all doing it differently, right? So having someone and a partner that is going to utilize your model, right, and how you're doing business and how you're reaching your consumer and can pivot and adjust and offer solutions for you, I think is a great tactic. Anytime you have a technology, partner that's going to push the envelope for you and create, unique workflows for you, is always going to help you create customized solutions and offer strategic, feedback, not only on the technology, but also on your workflow, right, is really a partner to you. I think there's going to be this push more to a strategic partnerships in technology instead of just adding a lot of different fintech on top of each other that can sometimes bog you down.
Yeah, no, I think it makes sense, especially as some of this technology becomes more standardized and in a sense commoditized. Having like you mentioned, Casey, an actual partner, not just another vendor, I think is going to make a big difference in the future. Erin, how about you from your perspective?
Well, I think Casey kind of nailed it with, every lender has maybe something that's a little bit different. And, because as a broker, working in the wholesale channel, I think the brokers need to embrace their lenders that they're using and the technology that the lenders offer. Because I'll give a great example, as that refi boom started to happen last year, files are coming in so fast, the processors can't move quick enough. And we're using our instant income validation and we have income in 15 seconds. And the processor's like, oh, I forgot you had that. So it's remembering what your lender offers and trying to use that. In addition, like what James said, using digital applications. I think the broker channel sometimes feels that that loses their personal touch, but in reality, it helps them be more efficient so that when they get the application back, then you can go back through it together and actually have conversations. Oh, I see that you put on here, you have another home. Is that a second home or is it a rental? Whatever the case may be. So by using technology, I don't think you lose relationships. I think you gain relationships because you can be faster, you can be better, you can be more accurate. And in the long run, that's going to just help your loans close faster. So, I'm a huge fan of embracing all of that. And I think all three of us kind of hit on some really good points of different versions too of technology. So embrace it.
Absolutely. Perfect advice. Perfect way to end that one. So let's next question here on specific to sales trends heading into this year, or I guess as we start this year. Casey, what are you seeing on your horizon as far, and if you say Zoom meetings, I'm going to have to hit the buzzer or something because that's already a trend at this point. But is there anything else you're seeing on your end that you count as a trend?
Right. Well, I think the trend overall, a market trend, is that refi boom, right? Really expanding the market and expanding, borrowers being able to be, communicate with borrowers and being able to have access to loans that maybe weren't in your pipeline, a year ago, and it really expands the market. So that's overall, I would say, a trend. But when it comes to sales techniques and individual, trends, I think that there's going to be, more of a push now than ever to really go where the consumer is. Where's the consumer? They're on their smartphone, right? So how do you get into their phone, right? And so how do you pursue social media and build relationships when maybe you can't be there in person? So establishing yourself, whether it's through TikTok, LinkedIn, Facebook, Instagram, right? Continue to build upon the social media sort of push that we've had in the industry, and whether it's videos and all the unique things that we're seeing loan officers do, which I think is great, and giving away information for free, right? Positioning yourself as an expert in your local market through social media, going where your consumers are, which is online, and really it's in their smartphone. How do you get on their phone, right? It's through social media apps. So I think that's going to be a big trend we're going to continue to see increase.
Yeah, no doubt about it. One, and the curious thing to me is, how do you predict trend-wise what the next big social media, platform is going to be, and how to get on it, and how to, do it in a compliant way. I mean, somewhere a compliance, marketing compliance person is, their hair is, popping out when they hear this. But I mean, it is definitely the future of the industry, connecting with borrowers on social media. So it's just a matter of doing it in a compliant way, and then finding the next platform for that. Erin, how about you? What's your take on this?
I think Casey nailed a lot of really good points. There's so many different ways to reach the end user, and it is using technology. I think video is a big component. I use BombBomb, and I've had some of my highest click rates and open rates when I do my video emails. And I'm dealing with the wholesale channel, so I'm not going direct to the end user, but I have brokers who use it, and they find great success with it too. So I can't give Casey more credit. I mean, she really nailed it. It's finding that platform, finding your voice, building your brand through those channels, and being an advisor, right? Like, I think as mortgage individuals, we need to be advisors, and the more we can advise, and that's going to create trust, and it just kind of goes full circle. So it's just really knowing what you need to do, building your brand, and using the right platform where your users are going to be.
Right. James, how about you? What do you see in trend wise in 2021?
So I think for myself, I don't know if this is a trend, but I think you have to be more human with clients today. I think half the people you speak to, maybe a spouse, a brother, someone's lost a job, due to COVID or what have you. So I think kind of personalizing that conversation where it's not quite so to the point. You have to kind of chameleon yourself around maybe what they're going through. For instance, I just had COVID. I got over it about a week ago, and you kind of almost have like a COVID bond with somebody. Not that that's the bond you want. It's not very cool, but people call me, hey, I heard you had it. You're just like, yeah, it's just this whole conversation. So I think, really understanding what people are going through. I think that their needs might be different. Maybe they have to go from a 15-year to a 30-year because they need to stretch out their payment. So it's not always, I think it's being a better listener right now, because people do, again, maybe their kid was in school and they've been home, and it's just a different environment for people. So I think you have to look at, really listening, trying to be adaptable, and, trying to be there as an advisor, but also, kind of as a friend. I think that's how we can do, sort of differentiate ourselves versus others that maybe just send an email with a closing cost worksheet and say, I can save you this much, versus like, hey, I'd love to hop on a call with you. I can help you, but, and then just kind of being there. I think you kind of can stand out versus someone that's maybe more about just getting a quick yes and then moving forward. So, and I don't think COVID's going to go away. I think we have a little run here. And I think this year's going to be interesting. I mean, we're going to see a lot of shifts and changes that we, might not even foresee yet. So I think it's just about being adaptable to everyone on the other line.
Yeah, well, I think you've got good advice there too, James. I mean, one way you can look at it, that it's a minefield trying to speak with someone this year with all the potential challenges and even losses that they went through last year. But to your point, if you're just a good listener and genuinely empathetic, then you can disable those minds and have a real conversation with someone. Well, let's next question here, Erin. Let's start with you on this one. So obviously, this last year, the big change for everyone in any industry was the number of virtual meetings that we have.
Yeah.
And I'm just curious, from your perspective, do you see that as sort of, even beyond once we get through the pandemic and everyone's able to start going back to work as much as they will? Do you see that as sort of the future of sales? That virtual meeting?
I do, because I think people are finding that they can work from just about anywhere. So I think we've seen people leave the big cities, from LA, even coming out, to the desert, or even going into Northern California to more rural areas where it's more affordable. So I definitely think that, given the fact that we've proven we can work from home, most industries have proven they can do it, other than, of course, like your manufacturing job, like where you have to be where the point of sale is. But a lot of industries, we found that we can work from home. So I do think there's going to be a combination, and I think it's going to be a while before people feel safe. Like, I've wanted to go back out and visit my brokers, but half of them they're not there. So I can't. And quite frankly, I don't want to get COVID. So sorry that you had it, James.
Yeah, it's not fun.
Yeah.
Well, James, you're the perfect person to ask this too. Then, how permanent do you see the change with virtual meetings?
So I actually think, that with virtual meetings, they're great. I really do. And a lot of people really kind of panicked right away, like, what are we going to do? Because they were so used to that bond in the office. So I did a presentation on it where I live in Orange County, where the average person takes 53 minutes to commute one way to work from Orange County or LA. They take 28 minutes to get ready for a normal workday. So you save 10.66 hours a week by not doing that daily, bi-weekly. They also have what are called super commuters in LA County and Orange County, where it takes, actually 90 minutes to get to work one way. So when you cut that down, you're saving so much time. And the number one stressor for work is the commute. I think it's number 1 or 2. So it's one of those things where when you cut out that, you're optimizing so much time during the day and you're de-stressing things a little bit, where I think it's a positive. I used to be one that I'd meet a realtor at an event or somewhere and I would drive, 45 minutes for a 20-minute coffee meeting. It really wasn't tangible. Hey, we should do business, versus like a Zoom call or a call. It helps you be more efficient, I think, for them as well. I do miss the in-person meetings. I think they'll be more spread out, maybe once a month or twice a quarter, because so many times it's almost like a meeting to talk about a meeting. It's not, you're really not gaining too much. And I cover, I have preferred realtor relationships from basically Santa Barbara to San Clemente. So I was one on the road at like 3, 4 in the morning for meetings to beat traffic. So I miss the offices, but at the same time, we're very efficient with Zoom meetings, and I think Erin hit it as well. I think there'll be a blend, because you can't, I think that building and that synergy base is really important. But I think we're so effective this way, and I think that Zoom will also continue to get better and better. Who knows what they'll come up with next, but there'll be better audio or features, or I know there's already some cameras where you can like read in what you're saying, I believe, and stuff. So they'll keep getting stronger. So, and we're probably not anywhere near it, because like you said, Erin, as well, which is right on the head, people don't feel safe, even if they, if they have an older parent that lives there, we don't want to put them in jeopardy. So I like this. I like working from home. I can be at work in 1 minute. I'm on by 5:30, and I can work till 7, and I'm done. So yeah.
Yeah. Well, and Casey, you're laughing about the meetings to have meetings and meetings to talk about meetings. What's your take on the future of virtual meetings?
Yes, I definitely think they're here to stay. And I recently saw someone post on LinkedIn that said, we all, passed a test that we didn't know was coming and we didn't study for, right? But the entire industry, sort of pivoted and changed and adopted, how we do business. And I think that with all things, there's a pendulum, right? And we had to swing one way. And, I don't think it'll ever swing back. I think it'll kind of be in the middle. And I'm hoping that eventually, there'll be a time where we can connect, over coffee, and maybe not go into an office and sit in a boardroom. And those types of meetings and presentations, may not happen for a long time. But I'm hoping that there will be, more connection in person, eventually. And obviously there's going to be a balance, right? And I think that the great thing about having virtual meetings and embracing technology to do that is that I'm able to still build relationships, right? Because I'm in your home, right? Like I see your office, I can see your kids back there, I can see a part of you, right? And you are in my home. And so there's this automatic connection, and not to focus it, just on females, but, I've connected with a lot of, female clients and lenders and friends over, what it's been like, right? And sharing that, even in a business meeting, connecting over, my son's in here asking me, can I get lunch, Mom? And I'm like, oh, 1 second, please, right? And so there's this balance and this connection, there's this authenticity that, surprisingly, virtual meetings has provided for us. So I think it's been amazing that we've embraced it. And, and I do love working from home. I worked from home for a long time, and I do miss some of the travel and connecting in person and, having conversations, but I've utilized social media and some videos to still connect and have those authentic relationships with colleagues, with lenders, with females, with tech experts in the industry. So we're still having these important conversations that used to happen at conferences, but now we're having them virtually. So
yeah, and I can't imagine a universe where Casey's not able to network and connect with people. So I don't know what it would take to get you away from other people like that. So you'll make it happen.
Oh, thanks, Dustin.
So I love stories. Let's my next question here is I want to hear your favorite sales story, whether it's a huge win that you didn't expect, or maybe some epic crash and fail that you learned from. So James, let's start with you.
All right, so I thought about this when you sent that the questions. I love when I can come from behind, I think, in lending and kind of close a loan that maybe others couldn't. So I had a big win about 3 months ago. It was a loan, and because I get very adamant about wanting to do it, to wanting to make sure I can close it. You get so emotionally attached. People don't always realize that our realtors, our clients, is we lose sleep over loans. My weekends are not well, good, because I'm thinking about it. I wake up and it's on me. I really want to perform. So I had a client that came to me. It was a big loan. It was about $3.5 million. This client had been to her bank and one other lender, and they just had no chance, and I got it very technically, from a technical standpoint. It was a bank statement, cross collateralization. We were crossing 2 properties from different states. We had to do a rapid repair and rescore. We had to cure, I think, about 30 NSFs. We had to pay off business loans / other loans that were attached / other liens. It was just challenging. There was, I think, 200 conditions. And so the joy in it was knowing that when we got it done, this client was in such a better position. And also the fact that we had climbed that mountain and it was referred by a really top, amazing person as well. So I think that sales story was because it actually got someone a home. It was actually a purchase cross, crossing to another property they had. So it helped them get to the end result. And it was about 3 months of everyday work, just based on everyone we had to involve. But I think those are my favorite stories, are one, getting people into homes that really want it, that really appreciate it. Also, it was a win for my team and I, because a lot of people didn't think we could do it. We had to get exception on exception. So we got it done. So that was a good win.
Great. Yeah, thanks, James. Casey, how about you? What's your favorite sales story?
Oh my goodness. Well, I'm going to tell you, I made a lot of mistakes in my career. My parents always say you were born a saleswoman, Casey. You've been selling since you were born, and although today I'm not in, a traditional sales role, I'm more on the strategy side. I have so many fun stories about, making huge mistakes, especially in the mortgage industry, where, you're not really familiar with the language and you don't really understand, some of the protocols, right, that you go through and that you learn. And when I first started in the industry, I remember sending an NDA over to a lender, and it was completely empty, right? I didn't realize I had to fill in all this information. And it was, I was working at a startup at the time, and it was this blank NDA, and I sent it and I CC'd my boss. And I was all proud of myself because I was, I was learning still. I was being mentored by him. And he was so gentle with me. He said, "Hey, Case, for next time, can you fill in the information?" And just very gross negligence on my part. But I always try to take, any opportunity that I've, sort of made mistakes in, and, utilize them to grow and to do better next time. And, to be authentic. I think that when you share your humanness and your authenticity with, another person, right? Although we might be selling them something, they're still a human being, right? And there's still that connection. And when you own up to your mistakes, say, "Hey, I acknowledge that I didn't do X," right? And you have that conversation with them, and you can kind of laugh about it sometimes. It becomes a story, instead of like, "Oh God, I can't believe I did that," right? And I've just embraced the fact that I make mistakes, right? And I learn from them, and I've learned to move forward pretty quickly.
Yeah, painful in the moment, but it's certainly
Yes.
helpful and useful down the road to learn from. Erin, how about you?
Wow, I had to think about this one for a while, just because I like Casey, we've all made mistakes, and the one thing that I've absolutely learned is just owning it, and the sooner you own it, the better. So my story, it's actually probably 8 years old, but it's still so important to me, because this person, the loan officer that I was dealing with at the time, he's now become a very good friend, and we just have a phenomenal relationship. So we had an underwriter who made a really big mistake, and we were down at the wire, and we had to all of a sudden come up with 5% of the borrower's own funds. And I'll never forget it. I was in a red light. I was in Orange County. I was in Newport Beach, and I was turning left, and I started to cry, because I felt so bad. In case you mentioned being authentic, and I just, like, even talking about it, I'm getting choked up. And it was one of those moments where my loan officer said, "Erin, it's okay." And I go, "No, this is not okay. I feel horrible. Like, this borrower on the other end of the line isn't going to get their house, because we need to figure this out." Well, we ended up figuring it out, and that's the one thing I've learned. We are problem solvers in this business, and I joke now that I'm a fixer, and it's my job. I'm here to fix things. I'm here to make them better, and we're gonna make mistakes. And I respect the heck out of this loan officer, because we worked it out together, and from that, we have a very good relationship. Like, there's 2 account executives that he comes to, because I'm a producing RVP, and he doesn't trust anybody else but us. And I think it has a lot to do with that situation. And, you know, you got to own it when things go wrong. And I really think that that's so important. And I've learned more from those situations than the ones that go smooth, because the ones that go smooth, you forget about.
Right. Well, and, you know, even owning your mistakes like that and, you know, getting a difficult loan done for a borrower. I mean, you create that, you know, borrower for life and customer for life relationship, but you also, you know, clearly you're creating those, you know, professional, you know, B2B relationships for life and colleague relationships for life that you know, once you've gone through the fires on something like that, you know, that trust is, you know, it's tough to break that trust.
Yeah. Yeah. I've even done like little care packages when it's kind of gone awry with, I've got like little Rolaids and like maybe Diet Coke, and you bring them the little gift. You're like, sorry, that went sideways. Here's a little token of my appreciation.
Well, a little thought goes a long way for sure. So Casey, let's go to you for the next question here. So looking forward here, what is the smart originator doing right now to prepare themselves for, you know, the eventual end? I say eventual using almost in my head air quotes here, because at some point the, you know, refi gravy train's got to end. And so what is that smart originator doing right now to prepare for that?
Right. Well, you know, I think there's several different things, and you know, as James and Erin kind of talked about, it's having that balance, right? Like, you know, focusing on the business that's coming in the door today, but also going back to, you know, your purchase relationships. And you know, I think that if, you know, waiting to market to realtors until rates shift, you're going to be a little bit behind, right? The realtors are already partnering with the ones that are, you know, in their smartphones, that are branding to them, that are, you know, in their face today. So I think the smart originator is going to, one, embrace technology. You know, two, if you haven't embraced social media, or you're not working for a company that is empowering you to be where the consumer is and to empower you to build a brand, to do a podcast, right, to be an expert in your local community, I think that's something you could start doing today. And then again, focusing back on your relationships, you know, maybe setting some time. You know, I'm not an expert, I'm not a loan officer, right? But from my experience in chatting with, you know, other loan officers, setting some time aside every day to make those phone calls, right? To, you know, send those care packages, to continue to build upon the relationships you have. And, you know, anyone that says they don't have relationships yet, or they haven't really been, you know, in the purchase market, it's, you know, start with the people you know, right? Start with the people you know, family, right? You know, start there and build out. So that's what I would suggest.
Yeah. Well, Erin, how about you? You know, in touch with originators every day here. What are those smart originators doing right now to, you know, prepare for, you know, the shift in the market ahead?
Yeah, I think there's a lot of different things that can be done, and a lot of originators feel like they have to go to the realtors, but what about going to financial planners, attorneys? I had one broker who has done a phenomenal job with, it's called the Blue Book, and apparently it's contractors. And so he was working with the contractors in his community so that when the contractor went out, if the work was $50,000, he's like, well, do you have the money? Maybe you need to do a cash out refi. You need to talk to my loan guy. So I think there's a lot of different areas that you don't have to think about your standard realtor relationships, because everyone's going for the realtor relationships. I think you got to find something different. At a processor, her husband works for UPS. Why not go work with all the UPS, you know, get into their safety meetings, or ask if you can attend something. I know that's attending things is harder, but it's finding different niches that not everybody else is doing. And that's going to make you different. And it's going to also create a really great bond with those people in that industry. Police officers, firefighters, that kind of thing.
Yeah, turning over the rocks that not everyone's turned over yet, right?
Right. It's
James,
different.
how about you? What's your thoughts on you know, what originators should be doing now to make sure they're not caught by surprise when rates move and they have to suddenly shift business?
That's a great question. I mean, I think, like I said earlier, I mean, you really have to work a long day. I mean, that's the first thing. If you want to produce, you just have to go for it. Clients are so needy. I mean, if they don't call them back in 30 minutes or an hour, especially during urgent times, you really have to push yourself. I think with an originator too, I mean, you want to look at trying to close all your loans you put in. I got a little bit guilty of this where I was putting in so many deals where if you get a recommend decline, it might sit and not actually get worked on to get solutions. So it's more about net closings versus kind of gross locks. So you want to look at really trying to make sure everything works, not just putting in deals. If you have 10 deals, but you lose 3, your net 7. Why not close all 7 and then get 3 later? So really making sure that you're touching everyone. I think I have seen people that come over from like, call center minded, and they do a bunch of refis and they burn out. So I think the model that I've tried to create is trying to always be able to sustain business and do business in any market. I think that's what kind of creates obviously longevity. It's kind of like the infinite model versus the finite model. If you've ever heard like Sam Sinek, who does a lot of speaking, that's really one of my favorite presentations he does. But you have to go after the low hanging fruit. You have to do refis right now, in my opinion, because those refis turn to purchases. They turn to clients that that then you get inside their sphere. So even if you're chasing refis, you are technically also enhancing your purchase opportunity in a sense. And you just have to right now. Going back to stretching yourself, you have to work the couple extra hours a day to make sure that you're not just doing refis and shutting off purchase. I think you have to look also at who's a good referrer. You don't need 300 realtors. If you have 20, maybe you go wider, not deeper, where you try to really get more out of that contact and get more in a deeper level, not just where they get an email blast, but you have maybe a weekly call or what have you. I think you have to keep your list really organized. Like I said earlier with my Excel list, you'd be amazed if you've been in the business 15, 16 years like yourself, like myself, how many people I've come in contact with. That databasing and continually touching is so important. People want to hear from you. Sometimes I'll send a text and be like, hey, it's been a while, how you doing? Can help you with anything? And they're like, oh, your timing is perfect. We're having a deal fall out. Can I call you in 5 minutes? So you just have to stay in front of them. That's kind of my focus, is always being, I don't want to call it hunting, but always being prospecting, always being visible, because it leads to a lot, And I've probably consistently done, I don't know, 130, 40 million a year for like 15 years, and it's just because you're always going after business, and so, but yeah, definitely touch your realtors, don't neglect them. I think with purchases, they always have to get priority. You had a great point, Casey. If you're not getting in front of it now, you're going to be behind. People are going to be, they're already going to have meetings or, 2 or 3 closings. You're going to be fighting from behind, So it's almost worth, not to contradict myself, but losing a few refis to take a couple of those purchase deals, because it will sustain longer. So hopefully there's some good points there.
Yeah, no, absolutely. All right, well, we've got just a couple more minutes, so I think, and this is a good transition, I think, to my last question here, Erin, we'll start with you. And I think it's interesting, you and James both kind of came into the industry at somewhat similar time to where we're at now. I mean, low rate environment, heavy on refi. And but what about, so if I'm a younger originator that came in here in the last couple of years, and you've only lived in this boom time with refis. What do you do if you're not prepared if you've never been through a purchase focus cycle? How can you plan ahead if you don't really have that book of business built up?
I think the biggest thing is to find a mentor. It's so important to find someone who's been in the business a long time, and people innately want to help. So if it's somebody in your own company, or it's you go to a networking group and you find somebody, or you go to a camp event and you meet another broker, it's find someone who's been doing it for a long time and ask questions. Say, hey, can we have a Zoom meeting? I really want to learn how to get purchase business. Can you teach me? And I think that 9 times out of 10, you're going to get, absolutely, I'll help you. And it's just because, again, people innately want to help. And I do think it's learning the business. I think knowledge is power. Those that know me have heard me say that 100 times. Know your business, know your brand, know your guidelines, know what you can and can't do, because so many borrowers out there think they have to put 20% down. James, you probably have the stat because you seem very statistical, and I don't have stats in front of me, but I do know that the average borrower still thinks they need 20% down. And we all know that's not the case. We can get in with 3% or even 100%, depending upon if the property's in USDA territory. So I think there's a lot that a new LO can do, and really getting a mentor, I think, would be the best way to start.
Yeah, that's great advice. James, how about you? What are you telling your younger originators now who haven't been around for a purchase cycle?
Yeah, I think for a younger LO, the first 6 months to 2 years is so important, because some are going to fall out of the business. I think I was going to say the same thing as Erin, having the right mentor that not only helps them structure their day, but encourages them. That was one of the things that helped me. Was my first sales managers didn't give me the encouragement. They didn't say, you might have some talent here, like, I like what you're saying. It was more just kind of like, it was just a little bit colder, you know? So I think having the right mentor is really important. I think now too, like at New American Funding where I'm at, I didn't come from this, you know, this book of, you know, this era, but you know, it's not a bad thing to also have some inbound calls to supplement, I think, because like we have inbound purchase leads where you just get better with repetition, and with every single deal you learn more, you do. And so it's hard to go out without kind of a natural feeding source today. I don't have that, but I know a lot of people in their third or fourth month are closing 5 or 7 deals a month, and they're just getting, you know, more at bats per se. I think you definitely want to kind of layer that, or, you know, piggyback that, like Erin said, with more of a senior, you know, loan officer that has more of a built-in kind of book of business. One thing I failed to say, but Erin had a good point, is I got a lot of my business from my networking group, you know, and it wasn't all realtors. It was one realtor. It was a financial advisor, a dentist, a CPA, and we met every morning for about 5 years, and we're still very close. We're not meeting anymore, but we still do business all the time. So someone that is more seasoned will teach you kind of how they went about doing their business before the call center era, or more of a bank mentality where a teller is going to welcome to the personal banker, to the loan officer. It's more kind of self-sourced and so forth. So I definitely would say, as a younger originator, find maybe kind of a natural lead source, you know, work with a senior person, maybe where you can get some runoff business, I think. Because if you're on your own, it's easy to get kind of burnt out quickly. If you don't have deals within 3 to 6 months, you feel like everyone's busier than you, you're not doing it right, it's easy to walk away. So I almost did. I almost left a couple times when I was first or second year, but you know, my third year is when it really clicked. Yeah, I love talking to young originators because you know, they have so much, you know, they want to make it happen, but they just, you know, they're so new. So but yeah.
Well, that's great advice, James. Great advice. Yeah, Casey. Well, let's close the deal here. What are your thoughts for younger originators who you know, don't know what they don't know yet?
Absolutely. I love talking about what you don't know yet. Well, I think Erin and James are really going to be the experts on these points. But again, it comes back to being authentic, right? Being authentic in the relationships that you're building. And things do take time, right? And be humble. You know, I just wrote an article on mentorship for the Women's Mortgage Magazine, and, you know, talking about embracing, you know, the experts that you have in the industry, and people want to give back. And sometimes you just have to ask, right? Like raising your hand, right? Someone, you know, maybe you're attracted to them not just because they're making a lot of money, which is what the younger originator might do, right? But who has an authentic relationship, and you know, you like not only how they are in the office, but you like who they are out in the world, right? So I think mentorship can be more not just about, you know, closing loans and getting business in the door, but, you know, personal development as well. Someone's going to help you grow and you know, evolve, you know, into the best version of yourself, right? And then the more you sort of know about yourself, the more authentic you are, I think you're going to be able to pursue those authentic relationships, and you know, and the business will come, right? You know, everyone loves doing business with who they trust, who they know. They're going to refer you business. You know, you get a couple good deals in the door, you did a good job, and you worked hard for them, and you're authentic. They're going to refer you business, right? It's just a natural flow of any kind of sales job. So that's what I would recommend.
Yeah, well, that's fantastic. Well, and obviously you three would be fantastic mentors yourself, because you've been mentored well, and I think that comes across for sure. So, well, Erin, Casey, James, thanks again for your time. This has been a fantastic conversation. I really appreciate you know, giving us your thoughts, and for anyone that wants to reach out to you, I'm assuming we can reach you all on LinkedIn. We'll have your LinkedIn links to your LinkedIn profiles in our description below. But thanks again for joining us today.
Thank you so much. Yeah, nice meeting you guys. Appreciate it.
If you enjoyed the conversation here too, you can subscribe to us here in our YouTube link, or our YouTube channel, I should say. You can also find us on SoundCloud, on Apple Podcasts, and on Spotify. And we'll be back again next week for another episode of Connect. We'll see you then.